This is Dino Aquino, the head of the fixed income desk for Security Bank Trust and Asset Management Group.
Yeah, I'm Raf Palma-Gil. I'm one of the equity fund managers of Security Bank.
What our group does is we manage other people's money or our clients' money. We make sure that it's in their best interest to make money for them as best we can and to watch the market and ensure that we do everything that's within the code of conduct of the market.
If you ask both of us, Dino and me, we're gonna say two different stories. No, for the fixed income side, it was really a good year for them. They were making a killing this year. Investors were, of course, given that there is the risk of losing, for example, one's job and this is just a general uncertainty. No, so people became more cautious and prefer fixed income over risky assets. I think for most of us, no, the number one lesson that we should have learned this year is really to have a buffer or an emergency fund. No, there are a lot of Filipinos who lost their job because of this pandemic, given that companies really took a hit, no, this year. No, so having an emergency fund or a buffer is really important. Before you even start considering investing, I suggest to have an emergency fund on hand, no, for instances like this. No, so even though these types of scenario or these crises rarely happens, it's a possibility that we still need to prepare. No.
I think the low rates will prevail, meaning the rates will be lower for longer, at least. Why is this so? Kasi if you look at the growth, our own house view on GDP actually pala is, just to mention, is 7.1% for 2021. But that doesn't mean that there's a real growth coming from 2020 because 2020 is a pandemic year. So definitely everything moving forward, if you just do a base year effect, everything moving forward will be positive growth. But if you look at the real recovery, meaning the economy to recover from the pandemic, I think the earliest we can see it is probably 2022. Meaning if you compare the base year of 2019 and not 2020, because 2020 nga is a pandemic year. So you have to look at 2019 as your basis for real growth. So if your growth is net positive from 2019, that means that it's going to be a positive growth. So the earliest we can see it probably is 2022. So with that, BSP, our central bank, our good governor, has already communicated to us that he's going to keep rates really low.
For this year, we're looking at around a 7,200 to 7,400 close for 2020. We're already near that level na, no? So, but of course, when you invest, you're not just looking at this year. No, you need to look beyond. So 2021, our official target is around the, if I'm not mistaken, around the 7,800 to the 8,000 levels. No? So which is more or less, give or take, no, around 10% return. But of course, as we move along, we change these projections as well. No? So just take this as a guide, no, for you guys.
It's been a tough year, to say the least, for all of us. Not only for Filipinos, but for everyone globally. I mean, the emotional stress that we went through this year is just uncomparable in memory. But we should always consider the fact that the markets usually come back. No matter how low it goes, diba? Usually the market gives back what it takes from you. In a bull market, people make money. But in a bear market, people make a fortune.
Investing is like dieting, actually. You just really need to start, no? To start working out, to start dieting. No? So same on your investment. No? Putting aside like as much as 20 pesos, no, will eventually turn into a good habit moving forward. So start small and start early.